right, we've got the GDX here, and it's shaping up to be something like this, I imagine. Pretty good run off the bottom here. It's only at this $37.50 right now. About 45 is the high, so I'm looking at something for, call that 2024. Here's 2023, 2025. So, in about 2 years, maybe this could be a $60, $75 stock, this GDX. All right, so it's going to take some patience. You're probably going to get a little bit of some chop in here. Kind of, if any of this is right, who knows? I mean, maybe the Fed gets everything back on track. Russia calms down. China can't produce anything. I mean, I don't know. Everything gets going fine, and then gold kind of just goes down there if supply chains get back online. That's possible. I doubt it. I think more likely we'll get some kind of one of these, something like that. Okay? So that's a 2 year time frame. It's going to be rough, choppy, pretty bad. If the thing is, you got to be a gold bug to really be in on this because you're gonna get thrown anytime it does, a little spike down on something. You're gonna get bucked off the Bronco here. It's happened to me tons of times in this whole bull market on some other stuff. The fertilizers, the steels, some of the coal, a lot of the oils. I got bucked off on some of these little teeny tiny little jerk downs, and could have had bigger positions. So key is here positions. You got to have a big position, or else, I mean, you can't get rich with diversified small positions. So if you're like me, I'm not trying to conserve what I've made over a lifetime. I mean, I'm really trying to swing for the fences here. So position sizing is got to be up there. Yeah, you gotta swing a big line, which is hard because you could be wrong, and this could be wrong. All of this nonsense on this screen could be complete and utter gibberish and just random lines drawn. But I mean, what I think is going on is that this these kind of moves up here. This is accumulation down here. Look, I mean, the volume comes down and then goes up in the upswings, right? I mean, look at this volume. It's just kind of, I would hope, yeah, this volume starts to come way up here on this, if this is an upswing that we're going to get there. So what it means is, I mean, maybe it's not random lines. Maybe it's showing the psychology of buyers and sellers, right? It's showing the psychology of the marketplace that, yeah, this is coming back in vogue. People are maybe starting to question what money actually is, if these numbers on a screen that they see are really representative of purchasing power, if it's a store of value of their labor, if it can actually trade you for another man's labor in the same quantity that you used to think it did 2, 3, 4 weeks ago, a month ago, 5 months ago, a year ago, into the future, if it becomes less and less certain how much of another man's labor you're going to be able to buy, then I mean you get these kind of things, in the price here. So maybe that's what's going on.